Welcome, I am Ernie Goss. I'm McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska, coming to you today to provide results for our May survey of businesses stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, right down the middle of the country. We're surveying manufacturers, and this is a leading economic indicator, sort of a canary in the coal mine, if you know what I mean by that. In other words, if they're seeing it good today, we'll see it good tomorrow and later on. It's a leading 3 to 6 months down the road. So what did come out of our May survey? Overall index falls to a still healthy level. Again, I'll call it a Goldilocks economy. Not too hot, not too cool. The index declines to 55.5 from 61.4 in April. It's a little bit low. It's a solid number, 55.5. As you know, the index ranges between 0 and 100. 50 is growth neutral, above 50 is growth positive, so it's growth positive, and it's been that way for many months. Here I've charted it between January of 2015 and May of 2017, and you see there in beautiful Creighton blue is the Mid-America, that's the 9-state region, and you see it did fall. And the U.S. number, I have put it in there because I don't have it yet. It comes out later on this morning. I expect it to be down, but who's to say? But both are still in a range that's indicating positive growth for the U.S. ahead, positive growth for the Mid-American region ahead. Now, the jobs number was down ever so slightly, but still at a very strong reading. The May number was 62.3, down from 62.9 in April. That's a very strong number, above 60. I'll put that's a little warm there. Year-over-year job growth is still only 1% in the region. That's the 9-state region, which is not as strong as the U.S. U.S. is 1.6. We ask about the biggest challenge, and no surprise here, almost every month, and you may ask, well, why do you keep asking if the same challenge? Finding and hiring qualified workers. That would be skilled workers. We're still talking about that. It's still an issue. That would be electricians, that would be plumbers, that would be welders, and so on. The list is long for those workers. Choosing a vendor, we ask about how important is it about data security? Because obviously if you don't want data security issues with a vendor, that's someone you're buying from. About 1 in 4 said it was an issue. So that's an important issue. Only 1 in 5 said it was a minor issue. So it is an issue, not as much as I would have thought. Our inflation gauge for the month was up to 73.1. That's up from 71.4 in April. That's getting into a range, I will call it at the wholesale level, pushing it up there. That's modest inflationary pressures, but it's moving in a direction that raises concerns, at least from economists, and I am an economist. So, what to watch for next month? Well, tomorrow is the BLS, Bureau of Labor Statistics, employment report, and of course, I keep talking about it. Dig down in there and look at the wage number. If it's growing more than 3% year over year, that's an issue. Why is it an issue? Pushes the Fed. It tells the Fed there's too much inflationary pressures. That means they raise rates. That's the second thing I'd like to ask you to watch out for is the Open Market Committee, FOMC, Federal Open Market Committee, meets on June the 14th. They'll announce a rate hike, at least in my judgment. Not so bad, a 25 basis rate hike. So watch out for that. And again, if the wage numbers are growing at a brisker pace, then you may see long-term interest rates increase as well. And that would be, of course, mortgage rates. Keep an eye on the CPI. That comes out on June the 14th also. And that year over year above 2%, it's going to be above 2%. But when it starts approaching 3%, that's something you need to keep an eye on. Now, what are the risk factors? Well, inflation. That is a risk factor. Inflation getting up to 3% year over year, that is a big risk factor. And why is it a risk factor? It means that long-term interest rates and short-term interest rates would increase, and that would have somewhat of a dampening impact on the growth that I am expecting and most economists are expecting. Housing price bubbles. Got to keep an eye on that. That's a risk factor. That is, keep an eye on it, and it's a risk factor. 7% year over year now. The Case-Shiller Home Price Index this past Tuesday came out, and it was 5.9% year over year. That's too much. We've been seeing that for a long time. Housing prices under $250,000, they're growing at even more than that. So watch out if you're buying a house. If you think you're flipping it, watch out. That's a risk factor. Another risk factor is no corporate tax reform. In other words, the Trump administration and the Republicans and hopefully the Democrats are getting together to bring us corporate tax reform. That's an issue. Healthcare reform, also an issue. If both those crumble, that would have some dampening impacts on the stock market and likewise on us. So, in summary, our report was a good one for the month of May. We were seeing more inflationary pressures. Wage growth is a little higher than what we've seen in the past. Interest rates are likely to increase, and that I expect both short and long term to grow throughout the rest of the year. Not significantly, but enough to dampen, at least put a little dampening impact on overall economic growth. Well, folks, that was it. That was our May report. Here I am on the first business day of June, and it was a pretty good report. I'll call it almost a Goldilocks. Not too hot, not too cool, but it's sort of cooling a bit. So, but otherwise, it was a good report. Until we meet again, and then when do we meet? First business day of July. We'll be here. I'll be reporting on our economic report for the month of June for the 9-state Mid-America region. Until then, may your economic cup runneth over.